You thought you were in control, you waited patiently, drew your zones, watched the breakout. Everything looked right. The candles, the momentum, the indicators. You clicked buy. And just like that, the market turned against you. Sound familiar? It wasn't a coincidence. It wasn't the market being cruel. It was the trap, and you walked right into it. But here's the truth they never tell you. The market is not random. It's designed, not by conspiracy, but by behavior. Patterns repeat because emotions repeat. And smart money, they've studied those emotions for decades. While you're looking for confirmation, they're creating it. While you're chasing price, they're building traps. And while you're reacting, they've already exited. The worst part, you didn't even know you were the target. But now you do. And that changes everything. Because once you see the trap, you stop stepping into it. And you start learning how to set your own. Most traders think the market is a war. They treat it like a battlefield: attack, defend, retreat, repeat. But it's not. It's a game, one that's invisible to most. And like any great game, the real rules are never written down. You watch the charts, you study the candles, you chase breakouts, time pullbacks, set alerts. You do everything by the book. But somehow, you're always just a little too late, just a bit too early, or completely wrong. And after a few rounds of this emotional whiplash, you start to wonder, is the market out to get me? But the market isn't a villain. It doesn't know your name. It's not personal. It's positional. See, what you're experiencing isn't chaos. It's not random. It's choreography. The market doesn't move because a bunch of traders decided it should. It moves when liquidity is engineered, absorbed, and released by those who understand the flow: the institutions, hedge funds, market makers. The ones who play the game on a level most retail traders don't even know exists. They don't trade the same setups as you. They don't react to patterns, they design them. While you're looking at the breakout, they're setting the trap. While you're placing your stop, they're reading where everyone else put theirs. While you're emotional, they're calculating. They play poker. You're playing checkers. But let's go deeper. These players, the so-called smart money, don't need to be right all the time. They just need to be on the right side of your fear, your greed, and your need to act. They don't need better indicators. They understand one thing: how you think. Because when you entered that confirmed breakout trade, they already saw it. Not just your order, but thousands like it. Stacked, predictable, emotional. They knew what would happen next, not because they can see the future, but because they've built systems to detect what retail traders do over and over again. You see price, they see liquidity, you see opportunity, they see inefficiency, you see efficiency, you see a level holding 3 times and think it's strong support. They see a cluster of stop losses perfectly positioned to be swept. And when price rips through that level, you're not being hunted. You're just being read like a book, because your habits, your reactions, your logic, it's all been seen before, hundreds of thousands of times. Welcome to the invisible game. And here's the dangerous part. You're not losing because you're not trying hard enough. You're losing because you're playing a game you don't know you're in. You're taught to look at patterns. They're looking at behavior. You're told to use indicators. They use order flow. You're chasing setups. They're engineering imbalance. And most traders, they'll spend years fighting price action, arguing with the market, looking for the perfect strategy while ignoring the actual mechanics of how price moves. Let me be clear. Price doesn't move because of MACD, it doesn't reverse because of RSI, and it sure as hell doesn't explode because your trend line is clean. Price moves because someone is willing to buy or sell size at a specific level and someone else isn't. That's it. Supply, demand, liquidity, intent, behavior. It's not mystical, it's mechanical. But the mechanics are hidden beneath the surface, where very few traders bother to look. Why? Because it's easier to believe the market is unfair. It's easier to blame manipulation or algos than to admit that maybe, just maybe, you're dancing in a room where someone else wrote the music and you don't even hear it playing. But here's the good news. You can learn to hear it. You can learn the rhythm. And once you do, trading doesn't feel random anymore. It feels readable. Like Daniel, a trader I mentored, he was technical, smart, disciplined. He used everything: RSI, trend lines, order blocks, even Fibonacci. But he was always one step behind, reacting, hesitating, getting whipsawed. Until one day, staring at the chart, he saw it. A huge spike in volume, but no price movement, nothing. To the untrained eye, boring. To Daniel, it was the breath before the punch, absorption, preparation. It was the first time he saw the game behind the candles, right? From that day forward, he stopped trading surface patterns. He started watching for intent, not just what price was doing, but why it was doing it. Who was behind the move? What liquidity was being targeted? What behavior was being baited? That's the moment everything changed. He stopped chasing. He started waiting. He started listening. That's what this part of your journey is about. Not learning another edge, not mastering another tool, but seeing the game that's been playing all along, right in front of your eyes, once invisible, now exposed. And that changes everything. Before the explosion comes the silence, before the breakout comes the buildup, and before every massive move you wish you'd caught, there was a phase most traders ignored. Accumulation. You see, price doesn't just move, it builds pressure. It waits. And when it's finally ready, it erupts. But by then, it's too late for most, because most traders are reactive. They chase what's already gone. They buy after the move, not before it, because they never learned to read the signs beneath the surface. This is where smart money lives, in the invisible zone, in the shadows between movement and stillness, where they quietly accumulate while retail traders grow restless. Let's break it down. Imagine you're an institution. You manage billions. You can't just hit market buy on a 10,000 BTC position. If you did, price would spike instantly, and you'd be stuck chasing your own liquidity. So what do? You accumulate strategically, quietly, over time. You let price go sideways. You let volume die down. You let retail traders get bored, stop watching, start doubting. And while the world is distracted, you build, you absorb, you position. This is accumulation. To the untrained eye, it looks like nothing. A flat market, choppy, boring. But beneath the surface, the game is being played. It's like watching ocean currents. The water looks still. But beneath, powerful forces are pulling, aligning, preparing for a shift. And when it comes, it's fast, explosive, unforgiving. But here's the thing. Accumulation doesn't happen without absorption. Absorption is the key that unlocks the move. And most traders don't even know what it means. Let me explain. Absorption is when large players take the opposite side of aggressive market orders without letting price move. Think of it like this. Buyers keep pushing. They keep slamming the ask. More and more orders hit the book. But price, it doesn't budge. Why? Because someone bigger, smarter, is standing on the other side, absorbing everything without blinking. To most people, it looks like a pause, a stall, a failed move. But in reality, it's strategic positioning. They're not trying to push price, not yet. They're letting you bring the liquidity to them. They wait, they absorb, they build, until the moment comes when they no longer need your orders. Because now, they're ready. That's when the real move begins. Daniel, the trader I told you about earlier, he learned this the hard way. He saw what looked like a textbook ascending triangle, perfect consolidation, volume increasing, breakout imminent. He entered long, confident, and then reversal. Fast, brutal. He was stopped out within minutes. What happened? Later, when he studied the order flow, he saw it. Thousands of buy orders hitting the ask, but a giant seller was sitting there, calmly providing liquidity. Price didn't go up because every buyer was being absorbed. That wasn't weakness, that was a setup. And Daniel, he wasn't in on it. He was food. But it changed him, because once he recognized absorption, he started seeing it everywhere. Before big moves, during false breakouts, inside fake support zones. He realized the market wasn't random. It was a story. And every story has foreshadowing. Absorption is the foreshadowing of the move. It's the silent warning that something big is coming, but only the attentive notice it. So how do you spot it? You look for effort without result. Aggression with no reward. Big buying, flat price. Big selling, no drop. That's absorption. And when you see it, you don't jump. You don't rush. You observe. You study how long it lasts. You wait for signs of exhaustion. You position yourself with the flow, not against it. Because when absorption ends, that's when imbalance begins. And imbalance is where the money is made. Look, this isn't just about reading the tape. It's about rewiring how you think as a trader. Most people are trained to chase confirmation, to look for obvious signals, to react to momentum. But smart money doesn't chase momentum. They build pressure behind the curtain. They accumulate when no one's watching. They absorb when everyone's confused, and then they release it all in one decisive strike. If you're only watching candles, you're missing the story. If you're only following indicators, you're already too late. But if you learn to read accumulation, if you learn to recognize absorption, you stop reacting to moves and start predicting where the pressure is building. And that's when you flip the script. You stop being liquidity and start trading with awareness. So the next time you see a range that feels like it's going nowhere, pause. Ask yourself, is this true indecision or hidden accumulation? Are we stalling or absorbing? Is the market sleeping or loading the spring? Because most of the best trades don't come from action. They come from waiting, from watching, from seeing what others miss. Accumulation is the calm. Absorption is the breath. And the breakout, that's just the final note of a song that's been playing for days. The question is, will you be the one who listens or the one who gets caught dancing too late? It always happens the same way. You wait, you analyze, you do everything right. Price breaks the level, volume surges, momentum is strong. This is it. You hit buy. And for a moment, everything feels perfect. Then the reversal. Fast, violent, cold. Within minutes, your stop loss is hit. You're left staring at the screen, wondering how something so clear, so obvious, could collapse so completely. It wasn't your setup. It wasn't your timing. It wasn't you. It was the trap, a liquidity trap, designed for you to take the bait. Welcome to one of the most brutal and most brilliant tools smart money uses to survive and thrive in the markets. Stop hunts, false breakouts, manipulated moves, and if you don't understand them, you're not just at risk. You are the liquidity. Let's strip away the myth. Markets don't move just because of breakouts. They move because someone needs liquidity. And where do they get it? From the most predictable behavior in the world. Retail traders chasing confirmation. The breakout above resistance, that's not a breakout. It's a honey trap. The price spike before a dump, that's not momentum. It's bait. The quick drop below support followed by an instant reversal, that's not volatility. It's a flush. These are not glitches in the market. They are the mechanics of how the market breathes. Here's the harsh truth. Large players, institutions, whales, prop firms, they need someone on the other side of their trades. They don't place orders where there's no volume. They don't chase moves like the rest of us. They engineer environments where emotion takes over logic, and in those moments, they feed. Let me show you how. Let's say they want to go long, big size, but the market is quiet, flat. There's not enough selling pressure to buy into without moving the price. So what do? They create it. They push the price just below a major support level, just far enough to trigger all those stop losses, the ones placed neatly by retail traders trying to protect their trades. And just like that, the floodgates open. A surge of sell orders enters the market. Fear takes over. Support is broken, they think. This is the crash. But it's not. It's the harvest. Because as retail panic sells, smart money buys. Quietly, calmly, into the fear. The move down was never the real move. It was the setup. That's a stop hunt. Now, reverse it. They want to sell a massive position, but they can't dump it into a flat market without crashing the price. So instead, they push price above resistance, create urgency, trigger breakout buyers, let FOMO flood the books with buy orders. And while everyone's chasing green candles, smart money is distributing into the excitement. They're selling not because price is strong, but because you made it strong. And then once they've offloaded enough size, they pull the rug. Price collapses, retail is trapped, and the cycle continues. This is the game. This is the invisible war between those who understand liquidity and those who feed it. So now let's ask the real question. Why does this work? Because humans are emotional, because most traders don't trade what they see, they trade what they feel. They feel the rush of a breakout and think, I can't miss this. They feel the fear of a breakdown and scream, I have to exit. And smart money? They don't fight that emotion. They use it. They anticipate it. They plan around it, and they profit from it. Every time you chase, every time you panic, every time you place your stop just under the last swing low, thinking it's safe, you're showing your hand, and they're watching. Let me be clear. This is not manipulation in the evil sense. This is not cheating. It's just how liquidity works. Markets are matchmaking machines, matching buyers with sellers, matching fear with opportunity. But if you don't understand the structure behind these moves, you're not participating in the market. You're being harvested by it. So, how do you escape? You change how you see the game. Start by asking, where would everyone else place their stops? Because wherever that is, that's where the trap will be set. Understand that the obvious level is the dangerous level. When you see a clear support line that's held 3 times, know that everyone sees it, and where stops cluster, liquidity forms. That liquidity becomes the target. That's why safe zones get violated. Not because the market is broken, because it's functioning exactly as designed. Once Daniel, the trader I mentored, finally grasped this, he stopped chasing breakouts. He stopped buying strength and selling weakness. Instead, he began to look for failed moves. He asked, where is the trap? He waited for the flush, the fake out, the sweep, and then, when the panic had cleared, he entered, not in the excitement, but in the aftermath. That's where real opportunity lives. Because once the trap is sprung, once the weak hands are gone, once the stops are triggered, the market is finally clean. That's when smart money makes their real move. And now Daniel does too. So the next time you see price break a level with drama, ask yourself, is this momentum or is it a lure? Are you early or are you being invited in late? Because the greatest edge isn't in predicting the move, it's in avoiding the trap. This is the part of the game no one teaches. But now you see it. Now you know. The breakout isn't the beginning, it's often the end. So stop being liquidity, start understanding it, start seeing the game for what it is, not what it pretends to be. Because once you stop falling for every candle that moves fast, you start moving with purpose. And that's the beginning of trading with awareness. Most traders stare at charts like maps. They draw trend lines, plot Fibonacci, paint support and resistance zones like battle plans. But here's the problem. They're reading the map upside down because the chart isn't just price. It's not just highs and lows, patterns and pullbacks. It's a living, breathing record of where traders committed and where they hesitated. And the one thing that reveals this better than anything else? Volume. Not volume over time. Not those bars at the bottom of your screen. I'm talking about volume at price, the volume profile. The real map. The map that shows not where price moved, but where decisions were made. See, price alone is a lie. It shows you the result, not the struggle. It's the surface of the water, not the currents underneath. But when you add volume to price, you start seeing what the market is really made of. You start seeing the layers, the footprints, the memory. Let me explain. Every level on a chart isn't equal. Some levels are loaded with volume, trades stacked upon trades. Others are hollow, barely touched, passed through quickly. The volume profile shows you this. It tells you where the market stopped and thought, where participants argued, battled, negotiated, and where it didn't. That matters a lot because high volume levels, called high volume nodes, are areas of agreement where buyers and sellers reached equilibrium, where they said this price is fair. And low volume areas, low volume nodes, that's where the market rejected price. Okay, those zones, they're like air pockets. Price can fly through them with very little resistance. And this is where everything changes because now you're not just watching price move, you're watching how easily it moves, where it wants to go, and where it wants to avoid. Let me show you how Daniel used this. He was stuck again, taking trades off support, selling into resistance, getting chopped in tight ranges and run over in breakouts, until he stopped looking at candlesticks and started studying volume. And suddenly, something clicked. He noticed that every time price reversed sharply, it was doing so at a high volume level, a place where a lot of traders had entered. Why? Because these areas had memory. People remembered their losses. They remembered their entries. They remembered their pain. So when price returned, emotions returned too. Fear, hope, greed. And that emotional memory creates friction. That's why high volume nodes often act like magnets. Price gets pulled into them and stalls. But here's the kicker. It's not always about rejection. Sometimes smart money uses those zones to build again, to reload, to accumulate in plain sight, because in high volume areas, they can do so without moving price too much. That's the trick. And Daniel, he stopped blindly trusting support and resistance. He started asking deeper questions. Is this level supported by memory or just by pattern? Is there enough volume here to hold a move or to absorb one? Is this a price the market cares about? And when he didn't see volume, he took it as a warning, because low volume areas are dangerous. They may look clean, they may look obvious, but they're slippery. The market doesn't like to stay in places where it hasn't spent time. That's why breakouts through low volume areas are often explosive. There's no one there to stop them, no memory, no resistance, no friction. So Daniel began trading between the volume, not against it. He'd wait for price to revisit a high volume zone. Watch how it reacted. Was it accepted or rejected? If it stalled, absorbed, and coiled, he knew someone was preparing. If it sliced through, clean and violent, he knew the market had made up its mind. He wasn't trading price anymore. He was trading structure. And that's what the volume map reveals. Structure, where things matter, where decisions cluster, where emotions were recorded. This isn't theoretical. A 2022 study from the Journal of Financial Markets found that over 70% of major reversals happen at high volume nodes, and over 80% of impulsive breakouts happen through low volume zones. That's not coincidence. That's market memory in action. So let me ask you, have you ever bought at support only to watch price fall like it didn't exist? Have you ever sold resistance only to see price tear through like a freight train? It wasn't the level that was wrong. It was the lack of commitment at that level. No volume, no interest. That's the truth. The candles won't tell you. And once you start using the volume profile, you stop trading like everyone else. You start asking smarter questions. And where did real commitment happen? Where was volume building behind the scenes? Where is the path of least resistance? And that's the edge. Because smart money doesn't draw trend lines. They look for liquidity. They look for imbalance. They look for zones where they can operate without exposure. And those zones, they're almost always marked by volume, not flashy candles, not fancy indicators, just evidence. So start watching the real map, because once you do, you'll stop being surprised by the market. You'll start reading it. You'll start understanding when to stay out and when to lean in. And you'll start to see that trading isn't about prediction. It's about preparation. And the volume profile, it's your preparation tool. It's the terrain map beneath the fog. It doesn't show you where price will go, but it shows you where it's likely to matter. And in trading, that's everything. They teach you patterns, head and shoulders, double tops, flags, pennants. They tell you the market is a machine, logical, clean, measurable. But they don't teach you the truth. They don't teach you the cycle, not the one in the textbooks, not the one printed on posters and trading courses. I'm talking about the real cycle, the one institutions live by, and retail traders are constantly trapped inside, because the market doesn't move in straight lines. It doesn't respond to your favorite indicator. It breathes in phases, and each phase is psychological. It's not a strategy, it's behavior. It begins with accumulation, not flashy, not exciting, just slow, tight, controlled price action. Low volatility, mixed signals, choppy candles. Most traders avoid it. It's boring. This market has no energy. Exactly. Because smart money is building quietly. They accumulate in silence, while the world sleeps, while YouTube screams, "Don't trade this chop." But it's in this silence that the seed is planted. Why? Because they need to load size without exposure. They don't want attention. They don't want confirmation. They want your boredom. So while retail traders walk away, institutions are buying, slowly, patiently, strategically. This is when volume rises quietly, but price goes nowhere. That's not indecision, that's intention. Then comes the shakeout. One violent move, a sudden drop below support, or a rip above resistance. It doesn't last, but it doesn't need to. Its only purpose is to clear the board, to flush out the weak hands, to trigger stop losses, to trap breakout traders, because smart money doesn't just build positions, they build conditions. Conditions that clean the chart, conditions that remove excess noise, conditions that prepare the path. And then, when the stage is set, comes the markup. That moment traders dream about. The explosive move, green candles, momentum, FOMO. Retail jumps in. This is the breakout. This is the move I've been waiting for. But they're late, because what looks like the beginning to most is simply the middle. The positions were built already. The risk was managed already. The real profit was already locked in. Now it's about exit. So while retail buys the breakout, smart money begins to scale out, but they don't dump everything at once. That would crash the price. They need liquidity. So they wait. They let the excitement build. They let social media fuel the narrative. They let newsletters call for 100K Bitcoin or tech stocks to the moon. And when the retail crowd is fully engaged, they begin distribution carefully, quietly. They sell into strength, they offload into demand, and all the while, price keeps rising or moves sideways just enough to avoid suspicion. Retail still believes, but smart money is already gone. Then comes the break, the moment no one sees coming. The news won't explain it, the chart won't warn you, but it happens fast. Volatility returns, support fails, stops hit, traders panic. This is the markdown, the final stage, the collapse. Not because something broke, but because the cycle completed. The market isn't crashing, it's resetting. Because once the distribution ends, once the inventory is offloaded, the market doesn't need to hold anymore, and so it drops. Not by accident, not as punishment, but as preparation for the next accumulation to begin. And so the cycle repeats again and again across every market, every asset, every time frame. But here's the tragedy. Most traders only participate in one part of the cycle, the middle. They buy the excitement, they sell in fear, they live in the markup and die in the markdown because they don't recognize the beginning and they never see the end coming. Why? Because no one teaches them this. Because most education is built on indicators, not behavior, on entries, not phases, on signals, not structure. But once you see it, once you recognize that the market is just human emotion in motion, everything changes. You stop chasing, you start waiting, you start asking real questions. Is this price action building or distributing? Is this excitement or exhaustion? Is this a beginning or the final breath before reversal? Because when you align yourself with the cycle, you stop forcing trades. You stop needing confirmation from the crowd. You become patient, deliberate, strategic, like the institutions, like the builders of the cycle itself. That's when trading transforms from gambling to reading, from hoping to observing, from reacting to positioning. So let me ask you, have you been fighting the market or have you simply been trading the wrong part of the cycle? Because the market doesn't care how hard you work. It doesn't care how smart your strategy is. It only rewards those who understand the rhythm. And now you do. So the next time you see price consolidating, ask yourself if it's really just chop or if you're witnessing the start of a move that's weeks in the making. The next time you see a breakout, ask who's buying and who's selling into that buying. And the next time you feel that rush of momentum, pause, because the best traders aren't chasing the move. They're already there. They waited, they prepared, they understood the cycle you were never taught. Now that you know it, you don't just see the market differently, you move differently. And in trading, that makes all the difference. You've seen the game, you've watched it unfold, silent, calculated, brutal, the stop hunts, the traps, the manipulations masked as momentum. And maybe for the first time, you're starting to see the truth. The market wasn't unfair, it was just one step ahead of you. But now, you know. And when you know how the game works, you don't have to be its victim. You can fight back. Not with rage, not with revenge trades, not with doubling your lot size to get it back. No. You fight back with understanding, with patience, with discipline sharp enough to cut through the noise. Because here's what most traders never realize. The market isn't your enemy. Your reactions are. It's not the price that beats you. It's the voice in your head saying, I missed it. I have to get in now. It's breaking out. I'll just take a small position. That voice isn't strategy. That voice is sabotage. And if you want to fight back, truly fight back, you have to start by going quiet. Silence the noise, the news, the Twitter feed, the fake urgency that tells you trading is about being fast, because it's not. Trading is about being aligned, not just with the market, but with yourself. So here's how you begin. You stop chasing price and start chasing context. Start asking, where am I in the cycle? Is this accumulation or distribution? Who's on the other side of this move? Because if you don't know who's in control, you don't know what you're trading into. Most retail traders walk into traps because they only look at patterns, candles, indicators, entries. But smart traders, they look for intent. They ask, why is price here? Not just what is price doing? They wait for the story to make sense, not just the chart. And when it doesn't, they stand down because waiting is part of the fight. Every time you skip a trade that doesn't align, you win. Every time you wait for confirmation instead of acting on impulse, you win. Every time you protect your capital instead of forcing a setup, you win. Fighting back doesn't always look like action. Sometimes it looks like discipline that no one applauds. The unsexy stuff, the lonely stuff, the boring stuff that makes your future sharp and focused. Let me tell you something powerful. You don't need to catch every move. You just need to catch the right ones. And the right trades don't feel like adrenaline. They feel like alignment, like clarity, like a sniper pulling the trigger after hours of waiting in silence. You know what weak trades feel like. They feel rushed, emotionally charged, like you're reacting, not planning. The strongest trades, they feel almost boring, obvious, like the market is handing it to you because you waited, because you watched, because you knew what to look for. And what do you look for? You look for confluence, not one signal, but several, aligning like stars before a launch. Volume shifts, market structure, order flow, a completed cycle, an area where everyone else got trapped and you're walking in after the damage is done. That's how you reclaim your power. By stepping in when others are stunned, when emotion has drained out, when the field is clear, because the best trades don't happen in the middle of the noise. They happen after the trap has been sprung. But it takes strength to wait for that. It takes a mindset most traders never develop because they're too focused on doing more when the real edge is doing less, better. So how do you sharpen that edge? You build a process. You define what you trade, when you trade, why you trade. And most importantly, when you walk away, because fighting back also means knowing when to stay out. Smart money isn't in the market every minute. They're not chasing every candle. They're waiting. So should you? Here's another truth. Most of your losses don't come from lack of knowledge. They come from lack of clarity. You entered because you felt something, not because you knew something, and feelings aren't an edge. Clarity is. So fight for clarity. Build rules that protect it. Track your trades. Review your decisions. Study your own behavior as much as you study price. Because self-awareness is the most underutilized trading tool in the world. The more you understand how you think, the less the market can exploit your habits. That's real resistance. That's how you become unshakable. So when the breakout fails, you're not caught. When the fake dump comes, you're not scared. When the volume dries up, you don't force it because now you see what's real. Now you know how the game works. And when you know the game, you don't need to beat it. You just stop playing the wrong way. You let others get stopped out. You let the crowd panic. You let the noise create the opportunity, and then you enter with precision. That's how you fight back. Not louder, not faster, not with bigger positions, but with stillness, with structure, with a brain that doesn't flinch when the chart screams. So the next time the market fakes a move, don't chase. Read it, wait for the flush, wait for the trap to spring, and then when everyone else is shaken and scrambling, that's when you strike. Not like a gambler, but like a ghost, already positioned before the noise, already planning before the move. Because you're no longer reacting, you're reading. And that's how traders rise. Not by knowing more, but by finally learning to do less with more awareness. This is how you fight back. And this time, you're not the prey. You're the one waiting in the silence, while the market moves right into your hands. Most traders think risk is a number, a percentage, a stop loss, a thing you add later after finding the perfect setup. But that's why most traders lose, because risk isn't a setting. Risk is the system. Everything, your edge, your mindset, your longevity, depends on it. Let me put it plainly. If you don't manage risk like a professional, you're not trading. You're gambling with better graphics. The charts might look like data, but behind every candle is human emotion and capital. Real money, your money. And the market doesn't care how you feel. It only responds to pressure, not passion. So if you want to survive in this game, if you want to do something sustainable, you don't just need a strategy. You need a risk blueprint. Let me tell you something brutal. The best trader in the world will blow up their account without risk control. And the average trader, they can be wrong half the time and still be profitable with the right system. Because trading isn't about being right. It's about surviving your wrongs. That's the truth. They don't post on Instagram. They post the wins, the wild gains, the $3 to 300K fantasy story. But what they don't show are the blown accounts, the sleepless nights, the days spent staring at the screen, trying to figure out how one bad trade wiped out months of progress. You think one trade can't destroy you? Try risking 20% of your account. Lose 3 times in a row. Watch your capital shrink by half and your confidence even faster. Now ask yourself, could your system survive that? If not, you don't have a system. You have a hope. Hope is not a strategy. And risking less when you feel nervous isn't discipline. It's fear management, not risk management. Here's what professional risk looks like. Predefined position sizing. You don't enter a trade and then decide how much to risk. You reverse engineer it. You start with what you're willing to lose, not what you hope to gain. Structured stop placement, not random, not based on how much you can emotionally handle, based on market structure, based on logic, not fear. Consistent risk percentage, 1%, 2%, not 5, not 10. Because if you're betting heavy on high confidence setups, you're not trading, you're just labeling your hope with a fancier name. The market doesn't care about your confidence. It only cares about execution. Now here's the part that will hit hardest. Every blown account was once a winning account. Read that again. No one blows up from zero. They blow up from overconfidence. They get a streak, they start to feel invincible. They size up, they remove stops, they break their own rules. And the market, it waits. It waits for that one moment when you forget the system and chase the setup. Then it takes everything. Daniel, the trader I mentored, he learned this the hard way. He was sharp, disciplined, he journaled every trade. But his flaw? He thought he could trust himself without a system. He risked 5% on a sure thing. It failed. He doubled down to recover. It failed again. Within 4 trades, he wiped out 30% of his capital, not because he didn't know how to trade, but because he didn't respect risk. That was the turning point. He stopped focusing on perfect entries and started building a risk engine. He capped every trade at 1.5%. He used ATR-based stop losses. He sized based on volatility, not emotion. He tracked drawdown limits and took mandatory breaks. And that's when he became dangerous, not to the market, but to his former self, because now he had stability. Now a losing streak wasn't a crisis, it was data. Now a missed trade didn't sting because there was always another one. That's what risk discipline gives you. Freedom. Freedom from fear. Freedom from revenge trading, freedom from emotional swings. You can finally breathe between trades. You're not riding the roller coaster, you're watching it from a place of control. That's the trader you want to be. And it starts here, right now. Not when your next win comes, not when you double your account. It starts the moment you say, my job is not to be right. My job is to protect my capital. Because capital is not just money, it's time, it's potential. It's the ability to stay in the game long enough to see your edge play out. You can recover from a missed entry, you can recover from a small loss, but a blown account, that sets you back years. So let me ask you, are you risking 10% on a single trade? Are you entering without knowing your maximum drawdown limit? Are you letting emotions dictate your sizing? If so, you're playing with fire, and fire doesn't care about your excuses. But if you're ready to fight like a professional, to trade like survival matters, to protect your future like it's already valuable, then start now. Build the system, define your parameters, respect the losses, measure the data, because risk isn't punishment. It's protection. It's not a backup plan. It's the only plan. And when you master it, you stop playing defense and start playing with confidence that lasts longer than your next trade. So the next time you feel the urge to go big, pause, ask yourself, would the version of me I want to become make this decision? If not, walk away. Because in this game, walking away with your capital intact is always a win. Risk isn't a choice, it's a system. And now you have one. Most traders think risk is a number, a percentage, a stop loss, a thing you add later after finding the perfect setup. But that's why most traders lose. Because risk isn't a setting. Risk is the system. Everything, your edge, your mindset, your longevity depends on it. Let me put it plainly. If you don't manage risk like a professional, you're not trading. You're gambling with better graphics. The charts might look like data, but behind every candle is human emotion and capital. real money, your money. And the market doesn't care how you feel. It only responds to pressure, not passion. So if you want to survive in this game, if you want to build something sustainable, you don't just need a strategy. You need a risk blueprint. Let me tell you something brutal. The best trader in the world will blow up their account without risk control. And the average trader, they can be wrong half the time and still be profitable with the right system. Because trading isn't about being right. It's about surviving your wrongs. That's the truth they don't post on Instagram. They post the wins, the wild gains, the 3K to 300K fantasy story. But what they don't show are the blown accounts, the sleepless nights, the days spent staring at the screen, trying to figure out how one bad trade wiped out months of progress. You think one trade can't destroy you? Try risking 20% of your account, lose 3 times in a row, watch your capital shrink by half, and your confidence even faster. Now ask yourself, could your system survive that? If not, you don't have a system. You have a hope. Hope is not a strategy. And risking less when you feel nervous isn't discipline. It's fear management, not risk management. Here's what professional risk looks like. Predefined position sizing. You don't enter a trade and then decide how much to risk. You reverse engineer it. You start with what you're willing to lose, not what you hope to gain. Structured stop placement. Not random, not based on how much you can emotionally handle, based on market structure, based on logic, not fear. Consistent risk percentage. 1%, 2%, not 5, not 10. Because if you're betting heavy on high confidence setups, you're not trading. You're just labeling your hope with a fancier name. The market doesn't care about your confidence. It only cares about execution. Now, here's the part that will hit hardest. Every blown account was once a winning account. Read that again. No one blows up from zero. They blow up from overconfidence. They get a streak. They start to feel invincible. They size up. They remove stops. They break their own rules. And the market, it waits. It waits for that one moment when you forget the system and chase the setup. Then it takes everything. Daniel, the trader I mentored, he learned this the hard way. He was sharp, disciplined. He journaled every trade. But his flaw? He thought he could trust himself without a system. He risked 5% on a sure thing. It failed. He doubled down to recover. It failed again. Within 4 trades, he wiped out 30% of his capital. Not because he didn't know how to trade, but because he didn't respect risk. That was the turning point. He stopped focusing on perfect entries and started building a risk engine. He capped every trade at 1.5%. He used ATR-based stop losses. He sized based on volatility, not emotion. He tracked drawdown limits and took mandatory breaks. And that's when he became dangerous, not to the market, but to his former self, because now he had stability. Now a losing streak wasn't a crisis, it was data. Now a missed trade didn't sting because there was always another one. That's what risk discipline gives you. Freedom. Freedom from fear. Freedom from revenge trading. Freedom from emotional swings. You can finally breathe between trades. You're not riding the roller coaster. You're watching it from a place of control. That's the trader you want to be. And it starts here, right now. Not when your next win comes. Not when you double your account. It starts the moment you say, my job is not to be right. My job is to protect my capital. Because capital is not just money. It's time. It's potential. It's the ability to stay in the game long enough to see your edge play out. You can recover from a missed entry. You can recover from a small loss. But a blown account, that sets you back years. So let me ask you, are you risking 10% on a single trade? Are you entering without knowing your maximum drawdown limit? Are you letting emotions dictate your sizing? If so, you're playing with fire. And fire doesn't care about your excuses. But if you're ready to fight like a professional, to trade like survival matters, to protect your future like it's already valuable, then start now. Build the system, define your parameters, respect the losses, measure the data, because risk isn't punishment, it's protection. It's not a backup plan, it's the only plan. And when you master it, you stop playing defense and start playing with confidence that lasts longer than your next trade. So the next time you feel the urge to go big, pause, ask yourself, would the version of me I want to become make this decision? If not, walk away. Because in this game, walking away with your capital intact is always a win. Risk isn't a choice, it's a system. And now you have one. Perfectly received. Here's exactly what you wrote, with no additions, no summaries, and no commentary. They told you to be patient, so you waited, but nothing happened. And when you finally acted, you were too early or too late. Because patience by itself is misunderstood. It's not just waiting, it's not sitting on your hands staring at the screen hoping for a setup to appear. Patience isn't inactivity, it's precision. It's selective engagement, it's knowing when not to act and when to strike with focus so sharp it cuts through the noise like a blade. Most traders confuse movement with progress. They think clicking buttons means they're improving. They think more trades equals more chances to win, but the pros know better. They know trading is a business of moments, not motion. And most of those moments are spent waiting, not out of fear, but out of clarity. Think of a sniper. He spends hours, sometimes days, watching a window. Still, quiet, invisible. Is he inactive? No. He's locked in, reading wind, measuring distance, studying movement. And when the time comes, he acts with absolute precision. No hesitation, no emotion, just execution. That's patience in its purest form. And that's what you need in trading because markets don't care how badly you want to be active. They don't reward the busy, they reward the prepared. Patience, when misunderstood, feels like boredom. But when mastered, it feels like power. It's knowing that doing nothing is a choice, an intentional edge. It's saying, I don't need to trade today because your capital, your mental clarity, and your edge are worth protecting. Let me be real with you. Some of the worst trades you'll ever take happen right after you say, I'm just going to take something. That one sentence, it's a symptom of a trader who confuses activity with progress. The market doesn't need your participation. It doesn't care if you're in or out, but you should, because the price of impatience is high. Impatience leads to overtrading. Overtrading leads to emotional exposure, and emotional exposure leads to unnecessary loss. So, how do you train precision? You start by building a criteria wall. You define clearly, specifically what a valid trade looks like, not just looks good, not just its near support, but 5, 6, 7 things aligned: volume, structure, order flow, market cycle, volatility, time of day, risk reward ratio. And if one of those is missing, you don't touch it. You let it pass because every time you pass on a low quality trade, you increase your odds of surviving long enough to catch a high quality one. That's how pros win. They don't force wins, they filter their entries. They act when their edge is alive, not when their ego is impatient. Daniel learned this after months of struggle. He used to take 15, 20 trades a week. Most of them felt justified. But when he reviewed his journal, he saw the truth. 80% of his profits came from 20% of his trades. The rest, noise. So he made a rule: maximum 2 trades per week, but only when they met his full Confluence checklist. At first, it felt like torture. He watched countless setups pass by, but over time, he noticed something. His losses shrank, his conviction grew, his stress disappeared, and his wins, they became monsters. Because when you wait for the right moment, the market moves with you, not against you. Your entries feel natural. Your risk is clear. Your confidence is quiet, not desperate. This is patience as precision. It's not laziness, it's control. It's saying, I don't need to trade, I need to trade well. That shift alone is what turns inconsistent traders into consistent ones. Let's be honest, anyone can enter a trade, but it takes discipline to do nothing when everything inside you wants to act. It takes vision to understand that waiting is a position, that no trade is sometimes the best trade, and it takes courage to be the only one on the sideline while the herd jumps into noise. But that's how you win. Not by moving fast, but by moving at the right time, and only then. Because the best trades aren't the ones that look exciting, they're the ones that look inevitable. You'll feel it when the market aligns, you'll see it when your preparation meets the moment. And when it happens, your patience won't have been passive, it will have been deliberate. So, from this moment forward, redefine the word. Patience is not waiting. Patience is preparation, without anxiety. Patience is not hesitation. Patience is refusal to act without edge. Patience is not weakness. It's the most lethal form of strength in trading. Because in a world where everyone rushes in, the one who waits wins. Let others fidget. Let others click. Let others chase. You're building something bigger. You're becoming a trader who doesn't just show up. You wait for the market to invite you in. And when it does, you'll be ready. Not because you're active, but because you've mastered the stillness before the storm. That's precision, that's discipline, that's patience, and that is your new advantage. There's a moment every trader remembers. Not the first big win, not the first blown account, not even the first time they learned what a candlestick was. It's the week where it all clicked, where everything finally aligned, where the chaos stopped feeling like noise and started feeling like rhythm. It's not just a week in profit, it's the first green week that felt earned. Not luck, not a fluke, not a scalp that went your way, but a week of deliberate trades, backed by your process, rooted in your discipline, executed without panic, and closed without regret. That's the moment trading begins to become who you are. You walk differently that week, not because you made money, but because you respected it. Because for once, you didn't self-sabotage. You didn't chase. You didn't break your rules when the chart got loud or the emotion got heavy. You traded with intention. And that changes everything because up until that point, trading is usually a storm, a blur of doubt and data, of overconfidence and hesitation, of back testing one day and rage quitting the next. You feel like two different people, the disciplined trader you plan to be and the emotional gambler who shows up when real money is on the line. But then comes the week where that split disappears. You follow your plan, you wait for your edge, you size correctly, you cut losses quickly, you hold winners with conviction. And for the first time, you don't just act like a trader, you feel like one. It's subtle, but powerful. And it's never just about the money. Sure, you might be up 2%, 4%, maybe even 10% that week, but that's not what you remember. You remember the way you felt in control, not of the market, but of yourself. You remember passing on setups that didn't meet your rules and watching them fail without FOMO. You remember stopping after hitting your daily target, not because you had to, but because you trusted your system. You remember journaling with clarity, not confusion. You remember waking up ready, not restless. That's the first green week that matters. And it's not the end, it's the beginning. Because from that point on, something shifts inside you. Trading stops being an activity and starts becoming a reflection of how patient you are, how disciplined you are, how honest you are when no one's watching. You realize your equity curve is just a mirror of your behavior. Every spike is a moment of focus. Every drop is a moment of ego. Every plateau is indecision. Every breakthrough is alignment. And when you understand that, you stop blaming the market. You stop saying things like, it tricked me, it was manipulated, I knew it would go, I just got in too early. You stop reacting. You start taking responsibility because now you've seen the version of yourself you're capable of becoming. And the taste of that, it's addictive. That first green week is proof. Proof that you don't need to be perfect. You just need to be consistent. Proof that risk management isn't just theory, it's freedom. Proof that your edge works when you let it work. Proof that you work when you stop getting in your own way. It's the quiet confidence that comes from doing the right thing when it was hard and seeing the reward unfold with clarity. It's no longer about being right. It's about being aligned. And you know what's even more powerful? That week wasn't exceptional. It wasn't lucky. It didn't require magic. It was just you at your best, following your process, trusting the preparation, staying out of the way. So now you know it's possible. Now you know you can do it again and again and again. Because when trading becomes who you are, you stop chasing wins. You start building habits. You stop measuring success by your P&L and start measuring it by how well you followed your system. You stop looking for perfect setups and start refining perfect discipline. You stop hoping and start executing. Let me tell you something. Most traders never make it here. They touch green for a day, then blow it on day two. They win one trade, then 5 impulsive ones right after. They get a glimpse, but never the full picture because they're addicted to results, not process. But you've seen what's possible when you do it right. And now the game has changed because the goal isn't to go green once. The goal is to build a version of yourself where green becomes natural, where it's not about more trades, but better ones, not about winning streaks, but flawless execution, not about chasing the market, but letting it come to you. This is when trading becomes part of your identity, not as a job, not as a side hustle, not as a hobby, but as a discipline, as a craft, a mirror, a lifestyle. And the moment that shift happens, you realize something deep. You don't just want to be a trader, you already are. You started as a student of the market. You watched charts, learned setups, made mistakes, took losses that felt personal because they were. You didn't just lose money, you lost confidence. You questioned your intelligence, your instincts, maybe even your future. But you stayed. And through the confusion, through the chaos, you began to see something deeper. Trading wasn't just about learning how the market works, it was about learning how you work. Every failed trade was feedback. Every emotional entry was a mirror. Every blown stop wasn't just a loss, it was a lesson in discipline or the lack of it. And somewhere along the way, the lines blurred. Trading stopped being just a skill and started becoming a language, a rhythm your mind started thinking in. Suddenly, you weren't just managing risk in the market, you were managing it in life. You stopped chasing every opportunity and started filtering for quality. You stopped reacting to noise and started waiting for signal. You stopped needing control and started respecting probability. That's when trading leaves the screen and starts living in you. It becomes a mindset, a way of seeing the world. Not every candle matters, just like not every moment in life requires a reaction. Not every dip is danger, some are opportunities in disguise. And not every setback is a failure, it's just a setup for the next move. You learn patience, not because you were taught it, but because the market punished you every time you lacked it. You learn emotional control, not because a book told you to, but because you watched your worst trades come from your weakest moments. And you learn respect for time, for risk, for process, for the brutal honesty the market demands of you daily. This is the final transformation, when trading no longer feels like something you do, but something you are. It's in your decisions, in your habits, in your mornings, in how you respond to uncertainty, not just on a chart, but in life. You stop trying to control outcomes. You start controlling your inputs. You stop asking, did I win? You start asking, did I execute? You stop thinking in profit and loss and start thinking in probability and edge. You see the world differently now. You see people chasing, reacting, over leveraging themselves in life with no stop loss, no plan, no awareness of the risk they're taking just by waking up without intention, but not you, because you've built something invisible, something few understand, a mind that can sit still in chaos, a system that filters noise from signal, a self that doesn't need the win to feel anchored. That's the trader's edge, and it's not just technical. It's spiritual, because when you've rebuilt your identity from the ashes of failure, when you've endured drawdown, not just in your account, but in your mindset, and when you've shown up anyway, you become something rare, not just a trader, but a weapon, calm, calculating, clear, and most importantly, consistent. That consistency starts shaping everything. You wake up earlier, you think clearer, you stop chasing dopamine, you find joy in precision, you start cutting distractions like bad trades. You don't just become a better trader, you become a better human, more focused, more grounded, less reactive, more strategic, because the skills that kept you alive in the market become the same ones that elevate you outside of it. And that's the final transformation, when trading becomes life itself, not because you're obsessed with the charts, but because the principles of the game have reshaped your character. It's not about the next trade anymore. It's about who you are when no one is watching, what you do when there's no immediate reward, how you act when the outcome is uncertain, but your process is clear. That's what the market teaches you if you're willing to listen long enough. It teaches you that clarity is better than confidence, that patience is power, that control is an illusion, but preparation is not, that failure isn't fatal unless you fail to evolve. You are no longer the trader who enters out of fear. You are no longer the gambler disguised as a technician. You are no longer chasing identity from your results. You found it. Because now you show up with a different energy. You trade less, but win more. You speak less, but your conviction carries weight. You don't chase green days because you've learned how to be green, even on red days. Your capital is protected, your system is refined, your mind is aligned. That's the trader you were becoming all along. This isn't the end, it's the integration. When the discipline you built becomes the way you live, the patience you forged becomes the way you lead. And the clarity you earned becomes the foundation for everything else you build in trading and beyond. So take a moment, look back at who you were when you started this journey. Now look at who you've become. You didn't just learn a market, you learned yourself. And now that trading has become life itself, you'll never move through the world the same way again. Not because you're perfect, but because you're aware. And that's the real edge. You made it to the end. And that says everything because most people quit halfway. They get excited, then distracted, inspired, then overwhelmed. But you stayed, you listened, you evolved. And now you're no longer just learning how to trade, you're learning how to lead yourself with patience, with discipline, with clarity. The market isn't going anywhere. It will always tempt, mislead, and test you. But now you have the system, you have the edge, you have the mindset. And comment below, this is the trader I'm becoming. Because we're not just here to talk about strategies, we're here to build traders, one decision at a time, one ritual at a time, one mindset at a time. Subscribe, turn on the bell, and welcome to the next level. This is Psychology of Profit, where trading becomes transformation.